Imagine it is the first week of May. You open your mailbox and there it is, your annual property tax notice. You've owned your home for decades. You raised your family there. And for the past few years, you've been using a government program specifically designed for homeowners like you, a program that let you defer or delay paying that property tax bill until you sell your home or pass it on to your family. You breathed easy, knowing the interest rate was lower than anything your bank was charging. Now picture opening that same envelope this May and realizing the rules have quietly, completely changed. My name is Joseph, and you are watching Canada Pension Guide, the channel built for Canadians who want straight answers about the money they have earned and the programs they deserve. Today, we are investigating one of the most significant and least talked about financial shifts affecting seniors in British Columbia right now. And if you or someone you love is currently enrolled in or thinking about enrolling in BC's Property Tax Deferment Program, I need you to stay with me for the next few minutes, because what the BC government announced in its February 2026 budget could cost seniors hundreds, and in some cases, thousands of extra dollars in interest every single year. And the clock has already started. Here is what I need you to understand before we go any further. If you are currently registered for automatic renewal on BC's Property Tax Deferment Program, and many of you are, because you set it up years ago and never thought about it again, your 2026 property taxes may already be set to defer automatically under the new, much higher interest rate terms. That means if you do nothing, if you simply click away from this video right now and assume everything is fine, you could be silently enrolled into a loan that costs you more than double what it used to cost you, not next year, this year, starting April 1st, 2026. And here is the part that keeps me up at night as someone who studies these programs. The government is not going to send you an alarm. They are not going to call you. There will be no red letter in the mail warning you that your interest rate has gone from approximately 2.45% to nearly 7% overnight. The change will simply happen quietly, automatically, and legally, unless you take specific action before June 1st of this year. So let me walk you through exactly what changed, what it means for your home equity, and most importantly, the 5 steps you can take right now to protect yourself. Number 1. What is the BC Property Tax Deferment Program and who is it for? Let's start with the basics, because this program is not as widely understood as CPP or OAS, even though it affects tens of thousands of BC seniors every single year. The BC Property Tax Deferment Program is a provincial government loan program. If you are 55 years of age or older, you may be eligible to delay paying your annual residential property taxes. Instead of paying the municipality directly, the province pays on your behalf, and the amount accumulates as a loan registered against your property. You repay it, along with interest, when you sell your home, transfer the title, or when the estate is settled. Think of it as a safety valve for seniors who are house rich, but cash poor people who own a valuable home, but live on a fixed income and simply cannot absorb a tax bill that may now be several $1,000s a year. In 2024 and 2025 alone, just over 83,000 BC homeowners aged 55 and older used this program. That is roughly 16% of everyone eligible. To qualify, your property must be assessed as Class 1 residential or Class 1 and 9 residential and farm. It must be your principal residence. And critically, all prior year taxes, utilities, and unclaimed homeowner grants must be fully paid before you can apply. One missed payment from a prior year can block you from accessing the program entirely. Number 2. What exactly changed and how bad is it? Now let's talk about the change itself, because the numbers are stark. Under the old rules, the interest rate on your deferred property taxes was set at the Bank of Canada prime rate minus 2 percentage points. With prime sitting around 4.95%, that meant seniors were paying roughly 2.45% per year. And it was calculated as simple interest, meaning interest was only ever charged on the original amount you deferred. Under the new rules, which took effect April 1st, 2026, the interest rate is now prime plus 2 percentage points. That is approximately 6.95% right now. And it is no longer simple interest. It is compound interest calculated and added to your loan balance on the 23rd of every single month. What does that mean in real dollars? On a $5,000 annual property tax deferral, you would have paid roughly $150 in interest per year under the old system. Under the new system, that same $5,000 deferred now generates approximately $350 in interest per year, a 133% increase. And because the interest compounds, that number grows every single month. Here is the smoking gun I want you to hear clearly. The BC government's own budget documents project this change will generate $11 million more in revenue in just the first year, rising to $34 million more annually by 2028 and 2029. That $34 million does not appear from thin air. It comes directly out of BC Seniors' home equity. Number 3. The grandfathering trap. You are not as protected as you think. I want to address something I am hearing a lot of confusion about, and it is important. If you deferred property taxes in 2025 or any year before 2026, those previously deferred amounts are grandfathered. They will continue to accrue interest under your original agreement terms. That is the good news. But here is the trap. That grandfathering only protects the amounts you have already deferred. The moment you defer even $1 of 2026 property taxes, or any future year, that new amount is subject to the new rate. Compound interest, prime plus 2. So if you have been enrolled in this program for several years, you now have what amounts to a split rate loan. Your old balance at the old simple rate, any new deferrals at the new compound rate. 2 different calculations, running simultaneously, accumulating on your property. The longer you stay in the program under the new terms, the more complex and costly this becomes. Number 4, the auto-renewal silent trap. This is the one that worries me most, and I want to say it plainly. Thousands of BC seniors enrolled in this program years ago and selected automatic renewal. At the time, it was the convenient, sensible choice. You set it up once, you never had to think about it again. But that same auto-renewal feature will now silently roll your 2026 property taxes into a deferral under the new, more expensive terms unless you specifically and actively choose to opt out before June 1st of this year. The government is not calling you. The government is not emailing you. The program renews automatically, and the rate change applies automatically. If you are not paying close attention, you will only find out when you receive your annual statement of account in May and see the new interest calculation already running. The opt-out process requires you to log into your eTaxBC account and send a web message with the specific subject line, opt-out-auto-renewal. That is the mechanism. No phone call will do it. No letter will do it. It must be done through your eTaxBC account. Number 5. Is this still worth it, and what are your alternatives? I want to be fair here, because the program still serves a real purpose for many seniors, and leaving it entirely may not be the right answer for everyone. BC's seniors advocate Dan Levitt said publicly that seniors who were on the edge of enrolling in this program will likely now step back scared of the debt accumulating at these new rates. And that concern is legitimate. At nearly 7% compounding monthly, the long-term cost to your home equity is substantial. But consider this carefully. If your only alternative is to dip into a GIC paying 4%, or to carry a credit card balance at 20%, or to sell investments at an inopportune time, the deferment program may still be the lesser of the financial burdens. The key is making the choice consciously, with the real numbers in front of you, rather than having it happen to you automatically. What I would encourage every BC senior to do right now is to pull up their account, review their current deferred balance, Run the numbers under the new compound rate over 5, 10, and 15 years, and discuss with a financial advisor or a trusted family member whether continuing to defer still makes sense for their specific situation. Here's what I want you to do right now, this week. Step 1. Go to eTaxBC at etax.gov.bc.ca and log into your account. If you do not have an account yet, create one using your social insurance number and date of birth. This is your command center for this program. Step 2. Review your current deferral balance and your renewal settings. Confirm whether you are registered for automatic renewal. Write down the total amount you have deferred to date. Step 3. If you do not want your 2026 property taxes automatically deferred under the new rates, send a web message through your eTaxBC account with the subject line opt-out-auto renewal. You must do this before June 1, 2026. Step 4. Check your BC assessment notice mailed every January to confirm your property is classified as Class 1 residential, and confirm that all prior year taxes and utility arrears are fully paid, because outstanding amounts will block your eligibility without warning. Step 5. Bookmark the official BC government program page at gov.bc.ca, navigate to taxes, then property taxes, then annual property tax, then property tax deferment. This is the only source of truth for this program. Not a blog, not a Facebook post, the official government page. And finally, if you have already received your 2026 property tax notice and you are unsure whether you should defer or pay, BC has updated its official interest and fees page with the new rate information. I will put the direct link in the description below this video. Let me leave you with the big picture, because this is not just about an interest rate adjustment. The BC government's stated reason for this change was to stop the program from being used as a cheap source of capital, and they have a point. Some wealthier homeowners were using it as a subsidized loan, deferring taxes at below prime rates and investing the money elsewhere for a profit. That was never what the program was designed for. But the policy fix, moving from prime -2 to prime +2 and flipping from simple to compound interest, is a blunt instrument. It solves the exploitation problem by making the program significantly less accessible to the people it was actually built to protect. The 83,000 BC seniors on fixed incomes who use this program not as a financial strategy, but as a survival tool. The structural reality is this. At nearly 7% compounding monthly, BC's Property Tax Deferment Program now functions less like a low-cost government safety net and more like a reverse mortgage. And Canadians deserve to understand that clearly before they sign up or stay enrolled in 2026. My commitment to you is to keep watching these changes so you do not have to watch every government budget announcement yourself. That is exactly why this channel exists. If this video gave you even one piece of information you did not have before, please share it with a family member, a neighbor, or a friend who may be in this program. And if you have not yet subscribed to Canada Pension Guide, this is the right time because more updates on BC's property programs, CPP, OAS, and GIS changes are coming very soon. Drop your province and one word in the comments below. I want to know where you are watching from and what you are feeling about all of this. And I will see you in the next one.